faced by other strategy versus other strategy. So before we continue, if you are a new YouTube video, please subscribe to my channel. If it's the first time you are seeing my videos, I've been posting many videos with the highest topics, best topics ever. Please subscribe to my channel to support my videos, to get more subscribers and more viewing. So let's get to it. So there's a big problem. It has been a competition with other strategy like SMC, the Alchemist, CRT, and TBS or the Turbo SUS. So there are people that they're preferring that their strategy are better than my strategy, the other strategy. So I want to prove them wrong. So let's start with the SMC. SMC, when it comes to SMC, like when I just remove this, I come and then I use the SMC. What am I going to do? I'm just going to mark levels. Like I'll mark this level right here and see the market is absolutely bullish. As you can see, the market is very bullish. So once the market broke, if I'm going to use the SMC block, that's what I'll come as a conclusion. So what am I waiting for? I'll be now waiting for the market to come and tap this area. As you can see, it has already tapped that area, but again I'll be waiting for the market to tap that area. Then I'll be heading for a sell. That's what the SMC is teaching us or is telling us. Now for the candle to form like this, and here from this GBP USD, I can see that we have the pattern. We have a pattern on this level right here that I marked previously. Let me show you. Yep, you see this level, it was on the 0.5 zone, although it was I muchly prefer 0.6 because 0.6 is a golden zone. So 0.5 also works. As you can see, it worked right here, and then the market went for a buy, bullish. Then it came down, it tested this zone. Once it tested this zone, I'm waiting for a third confirmation to sell. Now I'm using, which strategy am I using? I'm using the SMC. Now I'm not sure if the market will come back there and tap that zone, or the market will go for a bullish. Why? Because from our previous scene is that the market was on a bullish. Now I'm expecting to sell. Now it's according to our first rule, time consuming. It's very much of time consuming waiting for this formation to actually complete. Another thing I want to say about the time consuming, as using the SMC strategy, you have to go through multiple time frames. Like now, I'm not very sure if the market will actually come back here. Why is the market consolidating? We're on a New York session, and why is the market consolidating right here? And we are definitely on a New York session. Why is it consolidation? And the New York session has a high volatility. Why? You see, has so many questions as to why. So that's all of the time consuming according to the SMC. When you come to the CRT, candle range theory, I have to basically wait for a specific candle. Maybe I'll be how professional traders they use the daily time frame, so they don't have to come and look at the market every now and then. They just come day after day, waiting for the candle to form the perfect formation. But for beginners, if you use this time frame, you're gonna have to wait for a long time for the three candles to form, which is very much time consuming, and you might give up easily. Another thing I want to talk about is fake moves. What is fake move? Like, let me put that mark again, like here. Yep, right there. You see, what am I waiting for? I'm waiting for the candle to come out of that zone, then I'll be going for a sell. But what if the market comes? What if the market comes and broke this zone right here? What if the market come and do that? What if the market come and broke that zone and I've already placed for a sell? That's what I call a fake move. Comparing to the other strategy, other strategy does not have fake move, does not consume time. You see, there's a fake moves also on the CRT. Sometimes there's a fake move. That's why they combine the CRT and the TBS. Another thing is volatility. Now this one goes to the like this strategy, to the CRT. To the CRT, you can see like right here, there's a low volatility. The market is going up with that low volatility. It does not have a huge spread. Does not have a huge spread, so the market is going on with a low volatility. Now, this one also has another effect. According to the, if you're using the CRT, there's a specific take profit and a specific stop loss. So what if the market stop at the middle then reverse? You set your take profit and your stop loss, then the market didn't go reach halfway, then came back and hit your stop loss. Because if you are trading gold with that, that's most probably to be happen to you. Like today we have a low volatility like this. If you are trading the CRT, no, it won't be that perfect. The trade will go bad and you'll be just saying that the market did its own thing, but you didn't put much keen on the volatility. Another thing I want to talk about is proven strategy. You see, when using the other strategy, you can use it with a $10 account and above. But CRT, especially if you want to get a perfect CRT, you have to go on a higher time frame, like daily time frame. And if you're going to trade like daily time frame, you're supposed to have a big account. Like $10 won't work on a daily time frame. Although you're going to break down to a lower time frame, but also won't be that perfect. The price might likely tap your stop loss, then head back to your TP. Yeah. you will ruin your day. That's another thing about the, the problems that are faced. Okay, I would like to take also the other strategy. I'm starting to see that my subscribers are increasing due to the other strategy. People have started to like this other strategy because it worked perfectly and it works every day, and people have already proved that this strategy is the right strategy. And on the fifth point, we are going to talk about the risk taken right here. When I want to sell like here, I put maybe my TP bottom. Yeah, I want to sell it right here. I'll be putting my TP maybe on this, then my stop loss right here. As you can see, 1:2. The strategy might be perfect, but I'll be risking a lot. I'm risking a lot. Maybe I'm just winning the same amount that I'm risking compared to the other strategy, where if I have a zone like that, meaning my stop loss will be almost right here, and I'll be having a risk of reward of 1:4. Perfect. Or 1:4.5. Because if my let me show you what I mean by the risk taken. The risk taken with the other strategy. Let me activate my here. Yep. Okay, I'll take my volume profile, mark the Asian to London. Okay, let me zoom it for you so that you can see. Okay, now what I'm waiting for is that when the price tap this zone, it will head back to this area. We have well, let me measure the pips. 18 pips. So we don't have that much. So this is not my A plus setup, it's just today's setup. So when you take my gun box, place it right here, and my stop loss will be just a little more above that, the wick. Then my TP right there. I'm risking 1:3. This one is not my A plus setup, but I'm risking 1:3. You can see whereby this strategy works on GBP USD, which has a low volatility, meaning I'm not supposed to have to put a huge amount of money. I'm just small amount, small lot size. There, you stay small enough, long enough, you will be big soon enough. So make sure you go back and check the other strategy video, and you understand what I'm talking about, so that you don't get confused and you win 2026 together.